All right, so is it possible to time the real estate market? This has been an age-old question people have asked in the stock market. They say it doesn't matter, you can't time the stock market, it's impossible. But I'm gonna share a secret with you of how to time the market. I believe it is actually possible to time the market. There's some nuance there in the language, but I wanna share what my opinion on this is. It's a little different than most people. Now, Warren Buffett talks about this. He talks about Mr. Market, right? He's talking about primarily the stock market, but he says Mr. Market, and it exists in different assets such as real estate, will offer you one day. He'll be super elated. It's almost like a person. He's like bipolar. He'll be super excited and be like, oh, I've got this great, amazing thing. And want to charge crazy prices to you. And then the next day or another day, he'll be super depressed and just basically sell for whatever anybody's buying, right? And this exists in other assets like real estate as well. So I want to share why I think it's the best time to get in real estate right now, especially apartment investing and other commercial real estate. So let's jump in. Let's do it. All right, quick intro. My name is Bronson Hill. I'm the CEO of Bronson Equity. If we have not met, great to meet you. We provide educational material like this. We also do we provide opportunities for investors to invest in apartment buildings like this, ATM machines, car washes, oil and gas, other things. So we're doing all kinds of stuff, providing cash flow to investors. So quick disclaimer, I'm not your investment advisor, so do your own research. This is just my opinions. And is it possible to time the market? So again, I would say yes, and I would say no. So just timing the market, saying, hey, I'm gonna wait 6 months, I'm gonna get in, or I'm gonna get into the real estate market, maybe not the best approach. But and one example of somebody actually timing the market, if you were able to go back, and of course, when we look back, we can see, oh yeah, that was exactly the right move. In 2008, there are people that sold. In 2007, kind of saw the valuations getting high. They recognized the overheated market, and they got away from the crowd, and they were able to sell around the peak, and they were able to get back in around 2009 to 2011, right? So that would be awesome. If you did that, you'd be like, I'm amazing, I did it, right? But how did people know that to do that? Like, what was the reason they were able to do that? Well, when things are historically, from a historical valuation, you see things are super elevated. Not everyone, things are worth what they're worth. Sometimes it's hard to tell. And that's what we've encountered right now, is that how do we value apartments? How do we value houses? Well, the cost of money or the cost of debt has gone up. So there's been some challenges there. Also, people that did bridge debt have kind of gotten burned by having, gotten into deals and having some losses. But, it's important to have a long-term perspective when you invest. So again, it's not always timing the market, but it's time in the market. But I also believe that when you look at valuations, you can tell if you're getting in at an overheated moment. If you bought in 2008, it could have taken you 10 years to actually recover, assuming you held the property or be able to hold on to the property. Even a single family house, it could have taken 10 years to recover or more, right? So that happened. We watch people do that versus if somebody just sees, hey, here's a deal and here's an opportunity, it's something that we can get into. So we do something called relative valuations. We look at different asset classes. So again, we're not a one-trick pony. We don't only look at apartment investing. We look at ATM machines, car washes, oil and gas. We look at doing private equity with business, venture capital. We're looking at different types of investments. And there's a time to invest in each of those. And sometimes the best time to invest in something like precious metals is not the best time to invest in apartments or vice versa. So if you're able to look at relative valuations, there can be great opportunity there. So the best time to buy really is the time, it's being greedy when others are fearful, right? Being greedy when others are fearful. And I'm not a proponent of greed or of fear necessarily, but there's a time where people are really overexcited. And you see it, especially in things like crypto and other things where people get really excited, and we're seeing some of that, and it's understandable. But also, there's times where people are really afraid. So, Warren Buffett, his advice would be on this is looking for undervalued properties and when people are not wanting to buy. And we're seeing this, and I want to share it in multifamily particularly. We've seen some people that have gotten pinched, and around the country for larger multifamily, we're seeing declines in some areas of 20, 30, 40% in valuation. So if somebody's gone through that and they've seen a decline in the value, a lot of people that have invested previously do not want to invest in new multifamily deals, right? But it actually is the best time to be able to invest. Now, this is true about valuations, and Benjamin Graham, who was Warren Buffett's mentor, said this. He did a book called, he had a big, very thick book. I think it's Investment Analysis, I think is what it's called, Security Analysis. And if you get into this book, it basically talks about, one of the things he shares is that in the short run, The stock market is a voting machine. It's whatever popular, whatever is there. In the long run, the stock market is a weighing machine. And so it actually weighs the relative value of what is important and what actually is happening, what things are actually generating income. And it's similar, we see this in other assets such as real estate. Certain things that are super, super hot. I see areas like where I live in LA where it's like people are paying to have almost no cash flow, right? Or negative cash flow. You got to put 50% down and you're still negative cash flow, right? It just does not make sense to be an owner of some of it. But there will be a time where it actually makes a lot of sense in this market, right? So we're seeing cap rates starting to rise. Things are kind of looking more attractive. So the opportunity, we saw this in 2008. There were some incredible opportunities. Florida crashed and Vegas crashed, and people that came in have made sometimes 4 or 5 times the return, or the valuations have gone up incredibly. And if you use debt, it was an exponential. You get 10x type returns, sometimes in 5 or 10 years. So again, being aware of those valuations, being aware of where people are fearful. So again, when something's on the cover of Forbes, when your Uber driver starts giving you tips on an investment, maybe that's where things are kind of at the height. They're starting to really pick up and get at the height. But when people are afraid and people don't want to invest, that's a great time to start looking at it. So really the goal here is to buy when others are not, right? With multifamily, we've seen some carnage and just some of the distress and challenges, particularly with bridge debt in multifamily. So, it's important to be able to go in when nobody else is going in there. And we saw this, another example of this is in Detroit. Detroit got really destroyed through just a lot of reasons. A lot of the car makers moved out of Detroit. Inner city Detroit got really beat up. And then around 2008, 2010, 2012, a lot of these artists started going in and they were basically giving away the city, just get almost, if you could just pay the taxes, you could take over full city blocks. So they just went and started taking over these areas, and it was this huge revitalization that took place in Detroit. So again, just being willing to go in when other people are going out. So that's, I guess the whole point of it is that many people look back right on this time right now, particularly when it comes to apartment investing, and say, I wish I had bought a lot more. Now, why do I say that? Because valuations are down. Again, we've talked about this before in these videos, that if interest rates are higher, it reduces your buying price. Your buying price of a property is fixed when you buy, right? That's pretty obvious. You can't change that, but you can adjust your interest rate later. So if interest rates do come down, which they've forecast repeatedly, interest rates are starting or going to start coming down here soon, that we'll look back and say more money will come in, more lending will come in. It should make the cost of money cheaper. We're already seeing that a little bit. And what that should do is drive the price of multifamily apartments up. So again, it's something to just be aware of that. Now this quote really captures this from John Templeton, the great investor. He says, "The time of maximum pessimism is the best time to buy, and the time of maximum optimism is the best time to sell." It's very counterintuitive, right? So it's really about 80% of investing, and I think of life in general, is just managing our own psychology, right? Tony Robbins says that, right? And I think it's true of investing, just managing our own psychology. So I want to share this video with you that I think you'll like. If you enjoyed this video, it's why I love inefficient markets, right? If an efficient market is one that it's publicly traded, you buy and sell, you know exactly what something's worth. Things that are not efficient, they go for different prices at different times, like apartments and other types of assets, you can get great deals on. So that's why I love inefficient markets. Check out that video up there. And then if you haven't joined our investor club, we're doing some great deals. We'd love to, have you, if you're not on our list, you're not hearing about these deals. And we just have people that are really excited. We have a lot of deals that are producing a lot of cash flow. And I've just never been more excited about some of the deals that we're in as what we're seeing right now. So if you're not on that list, you're not hearing about it, check out the link below. Go to bronsonequity.com, hit the join button. We'll start a relationship with you. Thanks for taking the time to educate yourself. I look forward to seeing you on the next video.